Miss Avani Bhatt, Senior Vice President at JM Financial. Thank you for joining us here on News 9, Avani. Season greetings to you and your family and everyone at JM Financial. And we are in the final week of financial year 2024, and despite all this talk of a market correction, the market staged a very strong recovery late last week. Nifty gained about 400 points from the very recent low of about 21,710, and the 50 DMA, I mean, that has emerged as a strong support in all this time. Where do we go from now, Avni? I mean, do we consolidate or will the we continue on this path of recovery?
Good morning, Suyash and Amit, and regards for the festive season, and a very good morning to all the viewers as well. Yes, so last week what we saw was a selling climax for both the indices Nifty and Bank Nifty, and then last 2 days we saw a very sharp recovery, which was due because coming to the March end, which is not just the monthly end, it's the quarterly end and the financial year end.
Right.
And the obvious reasons are that mutual funds will try to, jack up the NAV for the NAV purpose. They'll keep the markets at least afloat. Maybe not rise higher, but at least they will not allow the markets to fall down. And to support that, even the options data that we saw, the built up in open interest, there was a huge open interest built up at 22,000 put for the March series, and unwinding was seen in 22,000 call. So now the OIPCR for this particular strike is above 2, which is a very good sign that put writers are back in action. India VIX also went down below 13%. So stability is gradually creeping into the system. And I don't think we are looking at any major downsides, at least for this next 3 days in this holiday shortened week. So 21,900 to 22,000 is a major support area which should hold. And on the upside, I think for in next coming 2 days, 21,200 is the crucial resistance. That was last week's high also. And if at all in next 2 days, if we Nifty manages to cross 22,200 level, then we may probably head towards 22,450 to 500 in this month itself. So that's a pretty bold call that I'm taking. But yes, level wise, 22,200 is a very crucial level that needs to be crossed. Only then we'll see the upside momentum for up to around 22,500 levels. And similarly on Bank Nifty also, it is yet stuck in a range of 46,000 to 47,000. But the good thing is that there's a huge amount of put writing that has picked up at 46,500 strike. So I think the immediate trading support level is at 46,500. And for this entire bullish setup that has set in last 2 days, I think 46,000 is a crucial support level. Which in case if it closes below that, then the entire setup is negated. We believe, I think on the upside, 47,300, which was last week's high, as well as the breakdown point, from where we saw a huge correction. If that level is crossed, then we should be heading towards 47,800 to 48,000 levels. So the bias has to be kept positive, at least for this particular series. And moreover on Bank Nifty this time, because Bank Nifty has already picked up a huge amount of rollovers. So that's a very good sign that we may see a 1,000-point rally anytime soon.
Good morning, Avani. I'll drive your attention to Mankind Pharma. Now, Beige Limited, which is an affiliate of Chris Capital, is offloading 2.9% of its stake in the company at a price range of 2,103 and 2,214, which is more or less around the price that the stock is trading at this point. It is at 2,150, so a slight discount. Now, the stock itself has been down today. What do you see as the reason for this, despite the sale?
Amit, what I can see on the charts is since last almost 2 months, if you look at the weekly charts, it has been consolidating. It's moving in a narrow band of 2065 on the downside and around 2200 to 2250 levels on the upside. So today also, I think it tested 2273 levels, and then we are looking at the selling pressure. So keeping aside any kind of news flow, if you only look at the chart structure, then I think technically it is still trading in that range, in that narrow band, and on the higher side, it is facing some selling pressure. So I think it requires a lot of volume activity to pick up further to break out of this range. And on the downside, I think 2120 is where the 50-day exponential moving average is. And as you mentioned, the stake sale band is also around the same levels. So in the coming few days, it should be trading in this range of 2100 to 2250 on the upside. No signs of any breakdown or breakout as yet.
All right, and another stock we wanted to pick your brains on is Avenue Supermarts. I mean, the stock has done phenomenally well in the last 6 days. So on a 6-day winning run, it's up almost 14% in that time period. And even this morning, Avani, it's up over 4%. And you know, Avenue Supermarts is one stock that had been in this long, period of consolidation. I think it has not delivered much in the last couple of years, but we are seeing a breakout finally. And volumes are also good in the cash segment. I mean, of course, that happened on the back of CLSA initiating coverage on the stock with a buy target and a target price of, I think that's a target price of 5,107. That's about a 20-25% upside from current levels. What's your take, Avni, over here? Avenue Supermarts, is it finally, on the verge of a breakout? Or in fact, I mean, it looks like it has broken out.
Yes, Suyash. So, in the first place, I would like to give the disclaimer that we had initiated this stock last week around the 4240 levels, and today we have booked out profit on this particular stock. But going purely by the chart readings, it has formed a very nice rounding bottom on the weekly charts, and the breakout point was 4240, from where it has rallied. Now, the immediate resistance is around 4595 levels. So, although our targets were met and we booked out profit, but if someone is holding, I think the upsides for the immediate term also looks up to around 4595 to 4600 levels. And on a positional basis, it has formed a nice rounding bottom, for which the targets on the upside come to somewhere around 5500. But that's going to take a little while. You need to give at least 3 to 6 months for these targets. From trading perspective, I think one should book out profits here and re-enter on dips.
And what are your picks for our investors today?
Now, keeping aside all the frontline counters, which I think the entire market community is chasing, there are 4 stocks that I would go with. The first is granules. So granules, one can enter in the range of around 430 for a target of 455, and keeping a stop loss of 415. The second counter is MGL. So MGL has consolidated. It saw a huge correction, and then it has consolidated for a long time. And now it is again looking up. So MGL in the range of 1320 to 1340 becomes a good buy. You'll need to give some time to this particular stock. It's not a very short-term trading stock. So keep in mind at least 15 to 20 days, and for a target of 1435 on the upside, and stop loss of 1285. The other stock is HDFC Life. I think we had initiated last week also. It did test close to our targets, and then it again saw some correction in the last week. The entry range is 620 to 623. I believe the stock has already moved up today. So one can wait for the dips up to 620 to 623 levels. On the upside, the targets are 645 and 652, and the stop loss can be kept at 608. And the fourth stock is a little ignored stock, I mean, which has been facing a lot of pressure. But I think the downside correction is done. It is Hind Unilever, HUL. So HUL, I think the downside correction is completed. It has retraced back the entire rally that it had seen earlier. And now from here on, it may probably consolidate for a few days and then move up again. So 2250 is somewhere one can enter into the stock for a target of 2320 and 2375 on the upside. And stop loss can be kept at 2210.
All right, Hindustan Unilever, Mahanagar Gas, Granules, among the top trading ideas from Avani Bhatt. Ma'am, thank you for joining us on News 9. Always a pleasure speaking with you.